All right, what is liquidity and how can you grasp this concept and use it in your favor? Okay, now the entire basis of liquidity is that it is resting orders. This is how I see the markets. This is how we all see the markets. Resting orders. Now, why is liquidity so important? Liquidity is important because it gives us direction. Without liquidity, guys, you don't have a basis for your trade. Markets don't move in a straight line. They move in patterns like these. You guys are familiar with uptrends and downtrends. We're going to be covering that here. We're going to be talking about liquidity. So what is liquidity in the first place? Liquidity are resting orders. You'd imagine where people are buying and where people are selling, and that's what creates these lows and these highs. So we're going to go over these examples first, and then we'll go over into the chart. Buy side liquidity. So how does one spot buy side liquidity? In an uptrend market, the market is moving in this pattern where we're at a low, we create a high, we create a higher low, a higher high, breaking above the previous high, a higher low, a higher high, breaking above this previous high. And so the market will move in this bullish pattern until there's a market structure shift. You guys will get into that later. And then we'll look at something like this, where the market's no longer breaking highs and it's now created this final high and is ready to move in a different cycle. So what this looks like on the chart is there's this high, there's this low, we create a lower high, a lower low, breaking below the previous low, a lower high, a lower low, breaking below this previous low. Now let me get into that. How do we spot liquidity on the actual chart? Now I just covered what buy side liquidity is and sell side liquidity is on an example, but let's actually start marking this out on the chart and what that actually looks like. So if we know liquidity is resting orders and price has yet to come return to those orders, then those orders are still resting there. That is the theory. For example, here, people bought in this area and these orders are still sitting here. Same thing with here. These orders people bought here and these orders are still resting here. Same thing here. So these are all draws on liquidity. All right, guys, I'm going to ask you a question. What kind of liquidity is this if it is resting at the bottom? This is sell side liquidity, right? Because if you're to sell the market, you're expecting to target these as your draws. These are your draws on liquidity. All right, lock that in. That is sell side liquidity. Now for buy side liquidity, what does that look like on the chart? Buy side liquidity would be orders resting at the top. Buy side liquidity here, buy side liquidity here. Now, once price takes out this draw on liquidity, we no longer need it. It's no longer important to us. We don't really need to see it anymore. We would just kind of see things like this. We have a draw here and here. And what does price do? It continues sweeping out buy side liquidity. Buy side liquidity at the top. Please write that down. But I hope I covered buy side and sell side. Now let's get into other draws on liquidity that are a little bit more prominent, more powerful, and if you're able to spot them, you're able to spot direction. Kind of how I covered it here. If you can spot liquidity, you can spot direction. If you can spot direction, you have a narrative to build off of. I cannot say I'm going to go long and not have a draw on liquidity to target. The same way I can't go short if I don't have a draw on liquidity to target. Again, if I'm going long, I'm targeting buy side liquidity. If I'm going short, I'm targeting sell side liquidity, right? Now let's get into the prominent draws on liquidity. I'm going to cover previous week high and previous week low. So right now I'm on the weekly time frame. I'm going to mark the previous week's high and the previous week's low. As you can see, this week's candle has already taken out the previous week low. And so what we can expect is for price to now target the opposite direction. In this case, previous week high. You see something like the 4-hour time frame, that's exactly where we're moving towards. If I'm to skip through, look at that. The previous week high was a target. And we know that because the previous week low was taken out. Okay, another prominent draw on liquidity that we use is previous day high and previous day low. So what you want to do is mark out, this is probably a bad example, but we'll still do it, the previous day high and the previous day low. As you can see, price is currently sweeping out previous day low. It's rebalancing something. It's not something to pay attention to right now. But what can we expect? If we rebalance, we're likely going to deliver it to the previous day high. And you can see it did exactly that. This is a much better example here. So we're still in the daily time frame. Let's say we were here in PA. And we just currently have taken out the previous day low. Where can we expect price to start delivering to? The previous day high. And so what that looks like on a smaller time frame, right? Price sweeps out the previous day low, and we deliver to the previous day high. Now, I hope you guys understand that. Imagine this, where we have the previous day high intact. We come and take the previous day low. Now we're expecting for price to start delivering higher. This is a good draw on liquidity because this is the previous day high. And this is how we would mark them, right? Previous day high as a target. And you pair that with other draws on liquidity, like buy side liquidity, right? So not only are you pairing these higher time frame draws, but you're now looking internally and pairing the buy side liquidity, sell side liquidity. And let's run through this. What does price do? As you can see, we end up stacking more liquidity here, and price ends up running through all this liquidity, including the previous day high, which was our main draw. Hope that makes sense. So you can start marking your previous day highs, previous day lows, your previous week highs, your previous week lows, and wherever we're closer to and how are delivering from, you can expect prices start delivering in the opposite direction. Of course, with added confirmation, but these are really great draws. Okay, I want to cover equal highs equals lows, relative equal highs, relative equal lows, relative equal highs, and relative equal lows, equal highs, and equal lows. These are how you mark them out. This is how I have them on my formatting, right? So what it is, similar to buy side liquidity, it's when price moves high, creates this high, moves lower, but instead of moving higher and sweeping out the previous high, we instead come up and stack another draw at the same level. So here, for example, this would be an example of equal highs right here, where price just kind of comes up and stacks a draw on liquidity right next to the previous one. This would be equal highs. Now, if you were to mark this out, this one out here, this would be relative equal highs, because it's not necessarily the same high, but it's right around there. So this would be relative equal highs. This as well could be a draw, relative equal highs. They're all in the same area. So you would just mark them as one, relative equal highs. And then the same thing at the bottom, where we have draw on liquidity here. You see how it's not necessarily the same level, but they're in the same range. This would just be a relative equal low. And then you have these draws where this is an equal low. You would mark that as equal lows. These are really strong draws on liquidity because not only is it order stacked here, but it's newly created order stacked on the same level. And so this draw on liquidity is very powerful, just as much as the equal highs is very powerful, right? If we leave equal highs, we're most likely going to return to them later. If we create equal lows, we're most likely going to return to it later. So it's as simple as that, right? Relative equal highs, relative equal lows. They're right around the same area. Equal highs, they're stacked highs. They're exactly on the same level. Equal lows, same thing. But yeah, guys, that's how you start marking out your draws on liquidity. We just covered today buy side liquidity, sell side liquidity, what the trends consist of, right? Highs and lows, lower highs and lows, things like that. Marking out your equal highs, your equal lows, your relative equal highs, relative equal lows. Marking out the higher time frame previous week high, previous week low as a prominent draw. Marking out the previous day low, previous day high as a prominent draw, and so on, right? There are other draws on liquidity that I'll cover in a separate video. It's a little bit more intricate, and I need you guys to understand this before you can move on to the next piece. I hope you guys grasp a little bit of what liquidity is, and you guys just remember that it's just resting orders, right? Just like here, like similarly, we're just coming back to take out this buy sell liquidity. You guys are just learning the basics. We're going to teach you how to format everything and how to combine not only liquidity, but the rest of the confluences to take buy orders and sell orders and have an actual edge in the market.